So we cannot really have an operational excellence in shipping forum without tackling the topic of decarbonization. Nicholas Bornos of Capital Link, I would like to welcome you to this very important panel that actually the topic that we chose is to focus on the shorter and I would say medium term. How do you adapt fleet operations to meet regulatory requirements? So we have a great group of panelists. I will let Mark Darley from Lloyd's Register do the introductions, but I would like to thank you all for being with us and for your great contribution to making this forum and the session a success. So Mark, the floor is yours. You can introduce the panelists and thanks from me.
Yeah, thanks, Nicholas. My name is Mark Darley. Good day, everybody. And I'm the Director for Lloyd's Register's Marine and Offshore Business. It really is a pleasure here to be moderating this panel today, but equally, I'm really pleased, as Nicholas says, to be joined by such an illustrious panel, as well as a global attendees on the panel that we have with you today. So just to run through who we have joining me today, I'm starting with Ralph Juhl. Ralph is the Executive Vice President, Technical for Hafnia. We're then also joined from Pacific Basin by Harshvardhan, Bhave, who's the Fleet Director. Also on the panel today is Arlie Sterling. Now, Arlie is the co-founder and president of Marsoft. Joining us from Seanergy Maritime Holdings, we have Stavros Gyftakis. And finally, but last but certainly by no means least, we're joined by Marco Fiori, who's the CEO of Premuda SPA. So just to sort of ground the session as before we get into the panel questions, and as ever, you know, we're more than happy to take questions through the chat that might come from the audience as we discuss over the next 45 minutes or so. But just to ground the session, now, as Nicholas highlighted, but as we all know, as an industry and from a regulatory perspective, led really by the IMO's 2030 and 2050 targets, we as an industry are faced with a decarbonization that has laid out the goalposts, I think it's fair to say, for a transition pathway. But really where we are now is trying to understand what happens between those goalposts in terms of how ships comply technically, or the fuel by which they run in future, but indeed the broader considerations and discussion around the commercial or societal impacts during that transition as we aim to achieve what the IMO has put in the ground in terms of an industry pathway and industry goalposts. Now, from a regulatory perspective, and what really we'll be centering on today are the impacts of what has already been defined. And those are two things, really. Those are the index for energy efficiency in the existing ships, so the EEXI, as many of you will know, but also then really the operational carbon intensity index, or the CII. Now, as we all know, the EEXI for existing ships really has been put in play to require existing ships to effectively technically catch up to their equivalent EEDI compliant ships, or the newer ships that we have within the global fleet. Then the compliance with the EEXI really means that a ship can continue to internationally trade. Now, depending on where a ship is in its survey cycle at the moment, the compliance deadline could already be less than 18 months away. So that's EEXI very much at the center of the panel and the broader industry's minds at the moment. Now, for ship owners with pre-EEDI or early EEDI certified tonnage, the EEXI index can mean quite a substantial amount of work, and we'll hear from the panelists today about how they're managing that substantial level of work. But really, for the majority of the EEXI impacts onto the fleet, certainly on day one, we won't have a huge significant impact on the operation of the vessels in terms of how vessels are actually being run today. Even with the tweaks that the IMO has made ahead of its meeting that actually starts tomorrow, when we expect that those tweaks and the broader regulation will be adopted to meet the requirement. So the way that many of us see EEXI is really the ticket to the game. But the real game in town in terms of how do we achieve 2030 and 2050 requirements is then when we move into the operational carbon intensity, or the CII. Now, CII will apply to most of the global fleet above 500 GT, and is the main mechanism, as I say, for achieving certainly those 2030 targets. Ships will need to technically adapt and operationally meet specified annual carbon intensity reduction targets from 2023, and then being rated on a continual performance basis. Now, the most recent installment of negotiations at the intersessional IMO session a few weeks ago, late in May, saw some compromise around what that annual criteria might be. And it was built around an 11% reduction in the annual efficiency review, or the AER, at a fleet level relative to 2019, with the door open to push even harder further down the line, and particularly from 2026 and 2030. But clearly that is still very much open for discussion. So a lot of eyes looking at what is happening this week and next at those IMO meetings. So there really is that sort of growing expectation that at the IMO, we could see more pressure being piled onto the industry by raising that bar between 2026 and 2030. At the same time as the enforcement regime is transitioning from light touch, I think it's fair to say, to materially starting to penalize underperformance and underperforming ships. Now, today, really, ahead of that session, it's difficult to assess the impact, but intuitively, the drive to push adoption will impose a new constraint on commercial operations. And that's why it's great to be joined by the colleagues that we have on the panel today. The impact of the regulation clearly will vary from sector to sector, and we'll hear today from a broad range of leading owners and operators to understand a bit more about how what they can see coming down the line is going to affect them and their particular fleets and their operations. So with that being said, perhaps I'd like to start then, Ralph, with yourself and Hafnia. One of the questions that remains unanswered is, when we talk about those AERs, is how the market will respond to the ratings of the ships, whether you're rated as an A, B, C, or even down at a rating D, based on the carbon intensity reduction performance. Now, yourselves and your company as an operator and charterer of ships in both spot markets and orientated pools, do you see these ratings having a role in pools and then the wider market when ships are first assigned in 2024? How do you see it, Ralph?
Thank you, Mark. Very relevant question. And for some sectors in shipping, this is a new thing. But for tankers, this being rated is not a new thing. The oil majors, our biggest customers, have for many, many years rated us to flag, to class, to performance, to various factors, put our ships into ranks and use them and utilize them as such. So for us, another rating is just another thing that we have to deal with. But from a industry perspective, I think that we have to remember that carbon reduction is serving a bigger purpose. And how do you drive a change through an industry in a fair manner? I think that is very, very difficult. And obviously, we need to get the polluting ships, the most polluting ships, shifted out with cleaner ships. That is the whole purpose of this. So if a rating system can secure an industry where we can use good ships and we can measure where the good ships are, then I think that is just a fair way of driving the carbon reduction policies through the world. In a good market, it doesn't matter. There is room for everybody. That is a customer-driven thing. If there is a demand from the end users, then ship will sail, and in a bad market, we will ship owners with poor ships will have to consider what to do to get them back into the market. And I think this is a good and fair driver.
Yeah, good. Thanks, Ralph. So what I'm hearing is not necessarily scared of a new rating system. Clearly, as you say, in tanker markets, you're used to ratings, but a rating system that has to be fair and has to achieve the goals ultimately. Good.
Yeah, absolutely. It's the way. How do you make it fair, and how do you measure it, and will it be different from sailing in Africa from Europe or US to Asia? This is the difficulty, but I think we can overcome that as an industry.
Good. Thanks, Ralph. So, turning to you now, Harsh at PB. With your operations at PB, Pacific Basin focused on bulk trades with significant opportunities, I think it's fair to say, for efficiency and productivity from triangulation. One of the concerns, as we know, of the IMO's reliance on the annual efficiency ratio, so the AER for bulkers specifically, is that trade may be disadvantaged to owners and operators using the smaller tonnage, as Ralph also alluded to, but also tonnage that's on trades with high frequency port calls and lower instances of ballast legs. Have you got any views on that as an owner operator at Pacific Basin of bulk trades?
Yeah, thanks, Mark, for asking that, because we don't really think that the AER is the right metric to use for for bulk carrier operations. It's well intentioned and it's probably expedient. It's easy to roll out, but in some ways it rewards inefficiency, and in the long run it might even lead to an increase in carbon emissions rather than a reduction. For instance, we have a large fleet of modern Japanese, relatively efficient bulk carriers, and we have a large network of cargo so that we are able to plan our operations, and our ships are loaded 90% of the time. However, the AER metric does not recognize the difference between productive loaded passages and empty ballast unproductive passages. So our ships, even though loaded most of the time, will be held at the same level as ships which are not loaded so frequently or most of the time. Secondly, what will happen is, in theory, it is believed that since ships are competing at their same levels, as the targets get tighter and tighter, ships will start slowing down. And at some point, the more inefficient ship will not be able to trade anymore commercially, and that will have to be phased out. However, in practice, what might happen is that with the slowing down, taking supply out of the market, for those inefficient ships, they might still be viable loading half the cargo. So if a ship loads half the cargo, the shortfall will have to be carried by more ships, and that will actually increase the fuel consumption instead of reducing it. So we don't think actually that AER will be useful to achieve the target that we want to achieve here. On the other hand, charterers, through initiatives like Sea Cargo Charter, they are using EEOI, which actually considers the actual cargo carried. And we believe that is a better metric to achieve the carbon reductions that we want to achieve.
Yeah, thanks, Harsh. So much more in favor of a cargo volumetric metric, as you say, like Sea Cargo are proposing, other than the AER metrics. Can I just ask then? I assume then on that you're going to voluntarily record both metrics, are you? Because that has always been one of the IMO's arguments, that they need to collect the data to be able to adopt different metrics outside of the AER. Can I just ask a sort of a related question to that then, Harsh?
We have been monitoring our EEOI for the last for the past decade, actually. AER has come in recently, so now we are tracking the AER as well. But EEOI, we've been tracking and declaring in our CSR reports regularly. Okay,
good. So already proactively getting the data to be able to propose an alternative. Great. Well, thanks, Harsh. So coming now to you, Arlie, if I may. So you and your company, Arlie, you're doing a lot of work with your clients to help mitigate the risks associated with the investment that's needed in decarbonisation and the related technologies. As I've already said, the operational carbon intensity index drives a reduction and could be, well, it's seen as a sort of constraint in certain quarters for the commercial operations from 2023. Now, with many in the industry highlighting that there are currently no zero emission options, at a scalable level available fully today, what steps are you seeing owners now taking to reduce emissions and address that challenge? And how does your company Marsoft help them with that?
Thanks very much, Mark. These are trying times for the industry. And at the same time, they're very exciting as the decarbonization is growing as an important theme. Our clients are taking steps now to reduce emissions, and they are working to make sure that they make money at the same time they do that. And that's really the huge challenge for the industry now as it looks to decarbonization, because decarbonization investments are not traditionally seen as moneymakers. And so what we work with our clients to do is to identify the opportunities to make money with the retrofit investments. And retrofitting, by the way, is the only practical step to take now to improve the efficiency of your ships. The technology is advancing rapidly, costs are coming down, so there are more opportunities available. And those, evaluating those opportunities is a complex process. That's why we've taken a three-step approach to helping our clients manage the path to decarbonization. One is we help identify what is the retrofit investment, or the best risk-return profile. Second, we help monetize the valuable reduction in carbon emissions that our clients are generating by those retrofit investments. And third, we're working to ensure that their banks understand the value of those investments and the consequences in terms of increased earnings potential and value for their ships. And therefore, the banks can provide that critical funding support for the investments. One of the things that's been very important for us as we've approached the decarbonization challenge is to team with the right people. Teaming for success is so critical. The word collaboration appears more and more in shipping, but really it's teaming. And so we've reached out, kind of gone back to school in some sense, gone back to MIT and working with the MIT Sea Grant Design Lab. We've helped develop systems that can rate alternative retrofitting combinations, their impact on specific ships and on a fleet-wide basis to help make that scientifically based decision on what is the right retrofit combination. We're collaborating with the gold standard, one of the world's preeminent organizations in the credit trading world, to make sure that the emissions reductions in shipping meet the highest standards set by the for carbon trading, and therefore earn the greatest value in those markets. And finally, we're working with the Poseidon Principles banks and all the others that are providing funding to make sure that those investments translate quantitatively into earnings and value improvement that they can see in terms of debt capacity. So we've really taken, as I say, the show me the money is the story that every ship owner has when they consider these retrofit investments. And we've taken the critical steps, 3 critical steps along that path to help the owners find the money at the end of the decarbonization path.
Yeah, thanks, Arlie. Thanks. Yeah, so as you said, I think the difference this time with this regulation is clearly, actually the technical solution arguably is the easiest bit. It's more about the commercial and societal implications and impact as you go through that transition pathway. And like you say, work with owners in terms of assessing those options against those 3 criteria. I do like the word teaming. Collaboration in the last 9 months has been the word that the industry has used, but I think it's also a nod and a recognition that to address this, I think for arguably the first time, we need to work harder and more together as an industry, because no one group or one organization has a solution to some of these challenges. We need to work together to solve what we have ahead of us.
Exactly, Mark.
Yeah, thanks, Arlie. Thanks. Okay, now just turning then to Stavros and Seanergy. Stavros, if I can. So shipping is often cited as an industry where nobody takes action unless a regulation is introduced. Wait till the 31st of December of whatever year it is, and then try and figure out what you're going to do. Do you think that this perception is valid, and do you think that the demands of the regulations and the regulators, i.e. the IMO, are being overtaken, if you like, by the demands of investors and customers that Arlie was talking about there? And do you think this means then that the regulators actually need to go back and need to do more to ensure that there's a level playing field going forward? Stavros.
Mark, thanks. And thanks very much to Nicholas and Capital Link for hosting our panel. Now, going to your question, no, I don't necessarily agree with the perception that shipping is reactive rather than proactive. We are operating in a capital-intensive industry, and therefore being proactive comes at a cost. And I think that things can get especially tricky when there is no visibility as to exactly what and when will be required. Adding to that, I mean, we come from challenging markets of the last 5 to 10 years. In addition, huge investment capex were expended in 2020 to meet the IMO 2020 targets. So, and when it comes to big investment, shipping has rarely rewarded first movers. Nonetheless, the industry is gradually responding to the call for improvement of the efficiency of the global fleet and is preparing accordingly for the transition. But it's not simple, it's not going to be cheap. Now, focusing especially on the bulker sector, since Seanergy that I represent in this panel is the only US publicly listed pure play Capesize company, now the perception that bulkers are slow in adopting to change, I think that it has probably to do with the size of the global bulker fleet and our diverse trading patterns. However, still progress is being made in the uptake of greener technology, as Arlie said before, such as energy-saving device installations, and also comparable progress to other sectors is also being marked. Now, going to your second point, I think that when it comes to environmental issues, the regulators are aligned with the asks of the investor community. But regulators are closer to the industry than investors, and therefore they are better able to determine the time frame and the depth of any new regulations and the impact of its implementation. So overall, I do think that the agenda promoted by the IMO and the regulators nowadays is basically what investors are ultimately looking for when investing, both from a social responsibility perspective as well as from an economic perspective. And in the end, it is companies that will enjoy investor support are the ones that have a clearly defined environmental and overall ESG agenda, and most importantly, that are able to consistently execute on this agenda in a smart and cost-efficient way, and with a clear and quantified economic benefit for them and their investors. So regulators are responding to the demands of the investors in a way that observes also the timing and the feasibility sensitivities of our sector.
Thanks, Stavros. So I'm hearing a very resounding yes. You think we are doing enough. The conversations are accelerating, and
we're making progress. We're preparing. So I mean, we're on the right steps.
Good. Okay, thanks, Stavros. Okay, turning to you now, Marco, and Premuda. So as we know, and as we've seen from the data already released by the IMO, many ships in the major segments, including the tankers and the bulkers, are operating with average main loads of somewhere between 40 and 60%, according to the data that we've all seen. Now, as an owner and operator of wet and dry tonnage, do you think will further reductions in speed be possible? And how do you expect to respond to the requirements to reduce carbon intensity of the ships that you own and operate? Marco, over to you.
Hi, Mark. Thank you very much. Look, I think that I was listening to all the brilliant comments of all the speakers of this panel. I think I would tend to agree with Stavros that everybody accuses shipping of being very non-reactive, but I think sometimes it seems also that way because the regulations are not very clear, and then everything comes down to the last minute that everything falls together. So there is, I think, also a necessity of having very clear regulation. On your question of the load, for sure, the best and the first thing that comes to everybody's mind is to slow speed or have derating of engines. But there is a limit to what you can do. So, you know, you can go up to a certain limit. After that, I think the inevitable question you're asking yourself is going to be, let's all try to do a transformation of the fleet into more efficient ships. But for doing so, there has to be very much clarity on certain points. First of all, point number one is the technology. Still today, we don't have a very clear idea of what's going to be the technology that's going to be applied the best. And second of all is how fast can we do it? Because unfortunately here, we are all talking about applying certain regulation to shipping. But from one day to another, you cannot scrap all the ships that are existing, because unfortunately, or fortunately for us, the world still needs the existing ships in order to distribute the goods all over the world. So I think there are these 2 points that are very important to keep in mind. The third point, which is very important in my opinion, is that the rating can be done, probably slowing speeds can still be achieved. As you're well aware, we're not starting from a period of very high speeds. We're already being slow steaming for a certain period of time. So we're talking about marginal reductions that are possible. The question here is also how you're going to distribute all these changes are going to be, who in the value chain is going to be taking responsibility for the added cost, because there's going to be cost in all of this. So who's going to pay for what? You know, the charterers would want the owners to pay, the owners would want the charterers, and the charterers and the owners are all agreeing to have the final consumer pay for this. But I think there has to be some kind of spreading the pain of all of this in order to move forward. And this has to be also very clear. The world of yesterday will not be the same of the world of tomorrow. So we'll see slow steaming marginally, but we'll also see different distribution with some impacts in the life of all of us, because at the end we're also final consumers of goods. There's going to be some added costs that have to be naturally shifted into the final consumer. So this has to be very clear. Nobody can take full accountability and cost of all this process, because that would be totally unfair. And in the end, it wouldn't work, because it would make unviable or unprofitable a business, which the world needs. So this is the last solution that we all need and we want to do. So I think these are a little bit the big questions that we have to ask ourselves. Then how we're going to do it, I think it's not going to be very difficult. I think technology is moving very fast. We'll have great system in the future. We talk about more and more about synthetic fuels, which probably would be a good solution for all of this. But the main question is, who's going to take the charge of this? Has to be very clear regulation, and also very clear who's going to take cost of which part of the cost is going to be taken. These, I think, are the big questions that we're going to be facing going forward.
Yeah, thanks, Marco. I couldn't agree more. You know, this isn't about technology. This isn't about capex. This is about opex, and by opex we mean, okay, who's going to take the money? Where's the money going to come from, and where's the money going to be redistributed to? Certainly, when you look at the fuels debate and the fuels conversation, clearly in the future, maritime as an industry isn't going to have its own unique fuel. We're going to be competing with other industries, be it the automotive industry, the land-based industries. And that completely changes the dynamics of how we've built up our OPEXs over the past years. So yeah, couldn't agree with you more there, Marco. So okay, we've heard from all the panel members now, and I just want to sort of turn my attention to, again, how specific organizations are dealing with the regulations, and maybe more the immediate regulations. And Harsh, you already mentioned some of the work that you've been doing over the last 10 years, but can we get a bit of a sort of an update from you, how you're responding to the challenges that we're discussing today, and the need to reduce carbon intensity by 2030?
Yeah, well, we have been approaching this challenge in various ways. The first of which, of course, is the ship itself. We have been adopting fuel-saving additions. We have increased the deadweight tonnage of ships where we could. Uh, then operationally, as I said, we have a very high laden ratio so that our ships are utilized most, which improves our EEOI. Then we have been undertaking a renewal program for our fleet, where our old and inefficient tonnage is being phased out, and we are buying newer, more modern and fuel-efficient ships. At the same time, because of the uncertainties in the regulations, we are not embarking on a new building program. And we are not, because we have to wait and see what new technologies develop, which can meet the long-term targets of the IMO. So we are waiting to see that in order before we think about buying new ships. So that's basically what we are doing. In the meanwhile, we are also, of course, following the regulations. We are checking where we stand, what our AER would look like, what might need to be done, what speeds we would have to run at, and so on and so forth. So that's what we're doing.
So lots happening. And I'd imagine it's a similar story at Hafnia, Ralph, if we turn to yourself.
Yes, pretty much. We have spent, I think that now we are calling it carbon reduction, but I think we all started many years ago doing fuel optimization, maybe for another purpose, but that was indirectly a carbon reduction coming with it. So I think many of us have been working on bus cap fins, newest ducts, new paint system, etc., for a long time. So it's not new for us to use the existing technologies or to develop or investigate or be innovative around various means that could reduce the fuels and thus the carbon intensity. I think that but we are still talking about the lower level of reduction. We are still talking about a newest duct could give you 5%. Another paint system can give you 5%, 7%. You can have 5, 7%, 10% here and there and everywhere, but it's not that you suddenly have 140%. So it all equalizes. So I think we have a huge experience over a long time to do these things. So we have actually used tremendous time of analyzing the ship's traits. See what are the artificial intelligence, monitoring of systems, digitalization, and used all this to assist the ships and the operators and the charterers in operating the vessels in a better and more efficient way. And that has actually given us great advantages, because the ship have sort of a limit. Its EEDI limit is theoretically the limit you have for a ship in full operation. So when you come to that, you need modifications to do changes. And then you are talking some total different costs, 3, 4, 5 million. Then you have a payback time, which is very severe. And then you start to compete with your own ships and other ships in a very wrongful way. So we have spent a tremendous load of time in establishing where are we and what do we need to do with our fleet. And we have a very clear picture of our 90 ships, what we have to do with them to sort of cope with the first step, 2030.
Yeah, very good and hugely valuable. As you rightly say there, Ralph, you know, whether it's muse ducts or changing bulbous valves or the more sort of, so I say, nascent technology like Flettner rotors or air lubrication, it's important to remember that it's ship specific and it's trade specific. So the fact that you've got that data for your 90 ships and your fleet, you know, it's fantastic to be able to, for you to make a real difference in whichever option you then choose from a technology perspective. So thanks, Ralph. And then finally, I guess on this one, Stavros, turning to yourselves and the work that you and the team have done there.
Yeah, I think it's pretty similar to basically what Ralph said before. I mean, we have been pursuing ways to improve the energy efficiency of the fleet for some time now. It's not something new in shipping. And we do believe that what Marcos mentioned, that at this stage of the transition, the impact of the existing ships is far more important than how the ship or the engine of tomorrow will look. So since 2016, we have installed on all our vessels advanced monitoring systems, collecting data on real-time basis, which we process through artificial intelligence platforms. We have seen immediate benefit from that in reducing by 2 to 3%, I mean, the average fuel consumption through weather route planning and voyage optimization. And more recently, I mean, we have been performing EPL projects in cooperation with MAN, RightShip, and in some cases also with some of our charterers. So what we're doing is we're building and optimizing the operational profile of our fleet. And in some cases, together with our charterers, preparing for what is coming. We have indeed also completed the XI assessment for our fleet. We're strategizing internally and again with our charterers on optimal ways to address the upcoming regulations. And we are trying in most cases to do so without having necessarily to compromise the operating speed of the fleet. So by implementing other technical and operational measures. For us, a combination of EPL and ESD installation seems to be the way right now to address the EEXI requirement. And once we are there on EEXI, we don't foresee any issues with the CII of our ships.
Yeah. Okay. Good. Thanks, Stavros.
If I can add something, look, I totally agree with what Harsh was saying about fleet renewal. That's the most logical thing to go ahead. The second thing is fuel optimization that Ralph was talking about. I totally also agree on that. But, you have to keep in mind that he was talking about 5% here, 10% there. At the end of the day, it's a curve really of diminishing returns. The more you want to go down that road, the more difficult it gets to get to the zero, which is the final goal. You can go up to a certain point. So if we don't have the technology to change all of this, we can always find second best solutions, but the real change is going to be from new technology, because then you go up to this curve of diminishing returns, and at the end, the last 10%, 20% will be unachievable unless you turn everything off and you start putting a sail or start rowing, because with today's technology, zero, it is very difficult. So I think what we need, and I'm very confident it will come, has to be really a big technological breakthrough in the industry, because otherwise it will be very difficult to get to the goals. And I think sometimes giving ourselves a very ambitious game post, it is a good thing, because stimulates very much the discussion and stimulates also the need of finding these new technologies. But I think that will pass through a lot of technology implementation.
Yeah, exactly. And just to build on what you said before as well, Marco, it's technology, but then it's also when we get into the real game of future fuels as well, to ultimately achieve 2030 and 2050. But that's about building out that network, that supply chain. We've been through the LNG chicken and egg stories that we all know of. That's about building that network that's going to support a maritime industry from a fuel perspective as well.
Mark, I want to jump in because, frankly, I think that these incremental steps that we take now, the 5%, the 10%, they make a huge difference right now, and we can't overlook that. The carbon we take out of our emissions right now is going to pay us back over many years when we don't have to take that out in the future. So we can't overlook this, but we have to make sure we're finding ways to monetize the value of that carbon saving, either through the increased earnings and support from the charters, or looking to new markets like the carbon credits market, or investing into new technology. And certainly I've seen more ship owners invest in hydrogen recently than I ever expected to. We're all collaborating on the new technology front. But the steps we take now make a big difference. They make.
I didn't want to say they're not important. I'm just saying that 1,000 miles march starts with the first step. So unless we take the first step, we'll never start there. But I'm saying to the final goal, there's going to be a lot of small steps, but then we'll be capped where achieving that extra 1% will be much more difficult than it was today. At a certain point, because you have these kind of diminishing returns of what you're doing on the output.
So Ali, just picking up and actually going to one of the questions that we've got from the audience there on commercial incentives and differentiating within a fleet of 10,000 vessels. Maybe one for you or maybe other members of the panel. Somebody's asking here, at what point do the panel members feel the high ratings, so the A to E, if you had a D or an E, will become a requirement for charterers? Or to ask it another way, at what point do panel members think lower ratings will start to cost shipping companies significant business, regardless of what cargo rates they offer? I don't know who would like to start us on that one.
You want a very simple answer, at least on my side, depends what kind of market you are. If you're in a very high market, charters are much more willing to compromise on these ratings than in a very low market. So, I think if you're in a very expensive market, also poorly rated ships will find their employment. So I think it's very much correlated to that. So that's why you need also charters discipline.
Anyone want to build on that?
In the Capesize market, I mean, which is, I would say it's different to the overall bulker market because it's a more closed club of charters. I mean, you have more blue chip names. It resembles a bit the tanker chartering market in a sense. We already see the requirement for certain efficiency rating in our charter parties, especially the longer term ones. I mean, it's not so strict as to restrict you between A and C also, but I mean, you already see a requirement for a minimum of E rating. So it's already there. I mean, and it's non-negotiable.
Yeah. Okay, just conscious of time, just a very sort of quick fire question then for the panel. As I said in my introduction, MEPC kicks off tomorrow. So this conversation certainly is timely, but if I could ask a couple of you maybe, if you could ask the regulatory decision makers one question about operational carbon intensity reduction requirements, what would it be? Maybe Ralph, I'll come to you first.
Yes, first of all, I would say that I have the deepest respect for the guys in IMO doing the legislation. I actually think they do a pretty good job under very difficult circumstances. So I'm not here to try to out-clever them. But if they had the time to rewind a little, then eating the elephant in smaller bites, that would be something that I would like to see, because I think we could make a huge and fast reduction in carbon and greenhouse gas emission by starting with the ships that are in a trade where you could actually reasonable ask them to go for battery, for ammonia, for something. They have the logistic, they have the fixed ports, they have the fixed lines to do these things. That could be ships like island ferries, that could be tugboats, that could be the other smaller boats. And then next step could be you go to ferries, you go to RoPax, you go to other container liners, and you have a stricter requirement to their reduction. And at the end of the line, you are looking on the ships that is very depending on a huge fuel logistic network over the world. And that's obviously the tramping ships, the bulk carriers and the tankers, who have no fixed ports where they can pick up their fuel for whatever that is in 10 years' time. So if that was possible, I think you could achieve a fast reduction in a very reasonable way, so all the segments in our industry could follow the pace.
Yeah, thanks, Ralph. So a segment-specific approach needed. Marco, same question to you.
Well, look, I tend to agree with what Ralph said. It's not just to pass the buck to somebody else, but I think when you are in a process this long and this ambitious, you have to try and get reduction and efficiency wherever you can get them. And it's a matter of picking the low-hanging fruits first, and then you move. I think this was the comment that we were discussing before with Stavros. Let's pick the low-hanging fruits, and then we move up from there. I think anything we do today, it is a step in the right direction. So let's start doing something rather than just discussing and then never to implement something. And then the second thing, probably would ask for very clear legislation. The more is clear, the more is simple, it's understandable, and the more people will fall in line. Just very clear legislation.
Yeah, thanks, Marco. Okay, I noticed we're up against time. We've got 1 minute left. So just to sort of summarize all that we've heard from the panelists today. Well, firstly, thanks to all the panelists for the views and the contribution there. Fantastic discussion. So what I think I'm firstly hearing is that, you know, clearly there's a lot of interest in this month's, tomorrow's MEPC, and particularly the outcomes on the decisions that relate around the EXI and the CII regulations. I think it's fair to say as well that there's still much uncertainty. We've all said that. Uncertainty on the operational implications, the commercial implications, and uncertainty as you look across the sectors to sectors, trades to trades, different operational profiles. And really what I'm hearing is that getting clarity about how these regulations may affect future decisions around vessels is absolutely paramount. That's the critical thing here that all the panels seem to have stressed, so that then we can make decisions about you know, whether it's our near-term operations, it's our existing ships, or indeed it's about our future fleet investments that we need to make. So, you know, many in the maritime industry are focusing on delivering 2030 ambitions, but it's also fair to say that this transition goes beyond shipping itself. You know, we're affected by other participants that maybe now we're having to collaborate with or understand what they're doing along the supply chain in other industries to really, you know, understand that broader welterweight conversation. But perhaps there is an opportunity here, I'll leave you with this, for the maritime industry to really lead or influence that conversation with what I've heard today and what others are saying. So with that, Nicholas, I'll hand back to you and the Capital Link team. Thank you very much.
Thank you.
All I would like to do is thank you, Mark, thank you, Harsh, Ralph, Stavros, Marco, and Arlie. Tremendous discussion, very insightful and very dynamic. You know, I really appreciate the back and forth of the discussion. Thank you very, very much. Thank you.
Thank you, Nicholas.
Thank you, Nicholas.
Bye-bye.